Hey everyone, Tom here. Today we'll be talking about the latest stock market news, as well as our technical analysis thoughts on the S&P 500 and Nasdaq after yesterday's moves. But first, I want to discuss with everybody a bit of a warning about the current retail investment participation in the stock markets and the euphoria and FOMO that Wall Street will possibly take advantage of over the next coming weeks. Stay tuned. So retail trader participation makes up nearly 25% of the stock market following the current crisis. That's up from 10% last year during 2019. And while this is awesome to see so many people interested about investing in the stock market, making money, and hopefully saving for their retirement and saving for the future, it's also a little bit scary because we're seeing euphoria and FOMO entering certain stocks. Tesla, Nikola, Chinese stocks, and the stock market as a whole with the big five: Amazon, Apple, Facebook, Google, and Microsoft. All these stocks are moving heavily up, and it's all due to retail participation, believing that these are great stocks. Are many of them great stocks? Yes, but that doesn't mean that they're fair value right now. They in fact might be incredibly overvalued. So why am I making this video? Well, it's based on yesterday's movements, really. 10,000 day traders an hour were buying Tesla shares, and almost 40,000 Robinhood users bought the stock in just 4 hours. That's some pretty mind-boggling numbers when we think about it, because a few years ago, you wouldn't even necessarily have that many traders buying the stock over a day. So there is so much interest in making money right now from the stock markets, and this is what Wall Street preys upon. It preys upon retail investors or unsophisticated investors, unfortunately. How does Wall Street like to prey on them? Well, they like looking at options. They really like looking at buy options as well, because options, if you don't know, they're all based on time, on timing the market, and of course placing positions that are potentially speculative, but on top of that are margined. So if you have a margin position long and it doesn't work out, you take a bigger loss, and that's more money for someone like the Wall Street tycoons to steal from you. So what have we seen over the last couple of years? Well, we've seen an increase in buy options in terms of interest and people using them, and a massive increase, in fact, meteoric increase over this current crisis, with retail investors piling into big risk, big reward type trading. It's happening in the Chinese stock market at the moment, and of course Beijing is trying to cool that speculative fervor, but are they being successful? Well, we'll soon find out. One thing I really want to talk to everybody about is the current performance of the stock market. So yesterday we have kind of flat everywhere except for the big tech stocks. So it seems like almost a month or so has passed since we last saw the tech stocks down. Microsoft, Google, Facebook, Amazon, and Apple have just been steadily increasing. The charts are basically vertical. You can see here on that little draw up that Apple has just been going up every single day. At the peak of the crisis, it went to about $200 a share. It's now trading at $381 a share without doing any real announcements about how well they're going or how poorly they're going. When we look at 6 months performance of the stock market, this is why it has me concerned. So many stocks are down, and there's actually mostly a sea of red here in the smaller sectors. But the big boys, Microsoft, Apple, Google, Facebook, and Amazon, are out in front by a huge amount. And in fact, all healthcare, tech, and more importantly, this new electric car vehicle companies are going crazy. They are seeing all-time highs, and not by just a little bit, they're seeing it by a lot. And again, this is the kind of thing that Wall Street preys upon and takes advantage of. So let's start by talking about Tesla stock before we get into the S&P 500 and Nasdaq thoughts. Here's Tesla's stock, and it went from kind of a crisis period low of around 350 all the way up to $1,800 almost a share yesterday. That is a meteoric rise, and you can see it here on the monthly. When we take a look at the daily, look at the kind of moves that go on with this stock. This stock is heavily traded by retail investors, so it shows us the pack herd mentality that's going on. Well, one thing that's happened is, of course, not only did Tesla rise incredibly heavily into February with a lot of greed speculation, but look at how the stock market reacts when it comes to a peak. Well, first thing we see is we usually see gapping of price. We generally see large sell-offs occur, and we sometimes see a topping where the market will go back and test the high. So what have we seen during this current big pull up from 1,000 up? we've got gapping moving. We have large kind of movements up and down after yesterday went from $1,800 a share all the way back down to $1,500. And what we might now see is we might see it come back, hit $1,800 a share, and then start gapping down again. And if it does something like that, we're usually seeing the height of the euphoria and not really fair price. Remember, Tesla's earnings are next week, I believe, on July 22. If they don't knock it out of the park, it may all come crashing down. And we need to be aware of that as investors in the stock market. So what does this remind me of? Well, it reminds me of other bubbles that have gone on and the manipulation that's gone on at the end. One of those, of course, was the Chinese stock market during 2015, 2016. It's well worth understanding what happened during that time. Massive rise, hundreds of percent, and then all of a sudden a huge decline. But also what happened in the cryptocurrency bubble, where we had a massive rise of Bitcoin all the way up to almost $20,000 a coin, and then a steep decline. This is a weekly chart here, and look at these last moves, huge moves. And then all of a sudden in 1 week, we had from almost $20,000 a coin all the way down to $11,000 a coin. That's a significant loss in a week. In fact, it's almost mind-boggling how big that loss is. But we are talking about billions of dollars in cryptocurrency back then, and we are talking about hundreds of billions of dollars in Tesla alone. Remember, this market here is nowhere near as big as the stock market, but the stock participation is extreme. And that's what we saw with that 40,000 Robinhood investors investing all in Tesla, one after each other. Remember, it's demand, supply on stocks, and Wall Street sees all of this. They manipulate it, and long term, they will pull the trigger. And when they pull that trigger, they will sell it off, especially if it cannot be justified by proper fundamentals. So let's talk about what's happening on the stock market right now and what we're actually seeing in the technicals. Well, one thing is that we've got earnings reports from JP Morgan, Delta, Wells Fargo, and Citigroup today. It'll remain to be seen how well they've done or how poorly they've done. But as I mentioned, get an economic calendar, be aware of the companies you're trading. And one thing you want to be looking at is, of course, Tesla. You want to be definitely paying attention to that next week, July 22. Let's see if it can hold the prices that it currently is. But I'd be pretty worried about it if I was in it long, because it's going to be hard to justify what we saw yesterday. So what about the NASDAQ and the rest of the actual markets? Well, before we talk about the S&P 500, I want to talk about this NASDAQ and what we saw yesterday. Well, we had a big engulfing candle come in on the NASDAQ, and it rose all the way to just above 11,000. We've been talking about how 11,000 was triggered the other day, that it would probably reach this level, slightly dip its head above that, and then come down, or at least find some resistance. It certainly did, but I want to talk more about this engulfing candle and the 20 moving average that we've got here. So we've got a 20 exponential moving average, and effectively price has been bouncing off that zone. It's been a while since it's returned back to that zone though. And look at the engulfing candles that happened before it. We had an engulfing candle here. We had a sell off into the 20. We had an engulfing candle straight into the 20, followed by a little bit of weakness. And then the last engulfing candle, we had another engulfing candle here into the 20. No engulf here, but a pullback into the 20. And then even engulfing over here, and it fell off quite substantially. So engulfing candles definitely mean weakness. They basically show sentiment in the market, and that sentiment is moving down. The bears are in control of this candle. At some point, the bulls were in control of the daily candle. Then the bears have come in, pushed it down, and usually it's followed by further selling. It also makes sense that it would try to come back to the 20, because if it did, that would put it back into the previous resistance, where the previous resistance up here at around 10,300 would act as support for the market. So there could be further selling across the board in terms of the tech stocks coming into the earnings season. It would make sense to have 3 days most likely of selling. It's quite a common thing to happen in the stock markets, usually around 2 to 3 days after a big sell, or at least 2 to 3 days to stabilize the markets is an expectation in terms of technicals, and that happens a substantial amount of the time. But what's happening on the S&P 500, the most important technical analysis chart of them all? Well, it's sold off that zone. We do a weekly analysis here on the stock markets every week. So make sure you subscribe and hit that bell if you want to know more about the week ahead and the weekly analysis levels. And effectively, we've got this 32 kind of 30 zone acting as resistance. It happened yesterday. where the 32.30 was hit and then immediately sold off from. And we kind of thought that may happen. And we've got two key zones here. We've got the strong resistance, where if the market was to break out above that, we would expect it to try and go and test all-time highs. And we've got the strong support down here at 3,000, where if the market got through that, it would go and pretty much test the 2,800 support down here. So we've got two key zones, and for the time being, we're stuck in what's called a technical channel. We're stuck in a range where the market is trading within that range ahead of earnings season, and earnings season's most likely going to break it out of that range once we start to see sentiment of the overall results come in. Pepsi reported yesterday. It reported pretty well, but again, people are at home, they're drinking soda. It kind of makes sense that they do all right. People do move to junk food, especially if they're not that happy with what's going on, and that does make some sense. So where's the stock market right now? Well, ahead of market open, we're seeing the stock market kind of testing this 3160, 3150 zone. This zone has been the strongest zone in terms of technicals throughout. 3150 we've been talking about all the time. We want to set alerts for that area. And if the market continues to go down here, it could get through this 200, break past the futures 3120. And if it gets through there, it might come back and do this, where it breaks through the 200 simple moving average on the 4 hour, and then it comes back and it tests the 3120. If we then see a change of trend on the smaller time frames to the short, that really opens up this 3,000 level and further selling within the channel. Remember, our channel length on the real market is between this 32.30 and 3,000 level. So if that's going to happen and that occurs, this is the type of potential shorting opportunity that you have. And these are the key levels that you want to be setting alerts for and recognizing in the market. If we're going to bounce off this level after last night's shorting, well, it makes sense to do so here. Basically, you'd be breaking down to a smaller time frame and looking for change of trends to the upside. And then, as we mentioned yesterday, there's going to be a big amount of take profiting still at this level. If it breaks this level, that's key. But for now, it's really stuck in the range. And whenever it gets up here, you're looking for potential short opportunities. When it gets through this zone, though, you're looking for buy opportunities. That's just what a trader does technically in the stock market. From a bond perspective, if we look at the 5-year note, we are almost at peak resistance with a bit of an ascending triangle coming into it. Very key to see how the bond notes really react. If we see uncertainty, generally bonds rise. That's what happened last time, and it's at that key point. Obviously, the real market is still concerned about what's happening. Otherwise, the bonds wouldn't remain this high. If we have the 10-year note, we have similar resistance. Again, very key, significant things that you want to have on your charts. And this could be a precursor. We see a breakout of this zone and a close. Maybe that's the precursor for the rest of the market to go lower as well. It's definitely one of those ones you want to have on your charts. You want to watch bonds with the stock market because they directly reflect each other in terms of importance. If you enjoyed this video today, make sure to subscribe, hit that bell, and of course, smash the like button to help us out. Happy trading, everybody. Stay safe out there, and hopefully don't get caught up too much in the FOMO and euphoria. See you in the next video. Bye.